An honest, brutal review of my 7-figure dividend growth portfolio that I've been building now for 6 or 7 years, buying stocks and ETFs every single day that the market's open. In this video, I'm going to share with you the good, the bad, the ugly, stocks that I regret buying, things that I missed out on, and more. So if you want to see a behind the scenes look into my 7-figure portfolio and more or less every single stock and ETF that I hold, make sure to drop a like down below, stick around, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, if this is your first time checking out one of my videos, this right here is my dividend tracker, which basically more or less showcases every single stock and ETF that I have across multiple different brokerages. Now, the amount of shares, the average cost per share, and even things like the dividend income, this is all going to be estimated. It's just a benchmark and gives me an idea of where the portfolio is heading on a weekly, monthly basis, which I find very useful. Now, the portfolio as it sits collectively is earning around $78,000 per year in dividends, more or less, and around $6,500 per month, which has grown substantially over the past 6 or so months. And this is because I've been reinvesting dividends into some higher yielding positions, which we're going to go over in this video. But to start from the absolute beginning, going over every single position in the portfolio. First off, at the top, we have 1,748 shares of ticker symbol BDJ, the BlackRock Enhanced Equity Dividend Trust. This is an ETF that I probably bought a little bit too much of in the early days of investing. And although BDJ does pay around a 5.5-cent per share monthly dividend, which is pretty decent, the overall ETF has decayed a little bit more than I wish it would have had. So probably if I could go back in time, I wouldn't have bought as much BDJ, although I'm perfectly fine holding on to it. Next up, we have our almost 1,500 shares of ticker symbol DIVO, or the Amplify CWP Enhanced Dividend Income ETF. Now, this is an ETF that luckily I came across pretty early, and I wish I would have bought more of it early on. The ETF has done amazing for my long-term portfolios and paid me dividends every single month on time. DIVO is an ETF that to this day I'm still adding more shares of, and I wish I would have bought more years ago. Then we have our 1,262 shares of Verizon. Now, I have no idea why back in the day I thought it was such a good idea to buy over 1,000 shares of a telecommunication company. To be completely honest, I do not know where my head was at. Verizon was offering like a 4% or so dividend yield. Now, this is because I bought Verizon much higher than where it's trading currently. I bought Verizon in the 50s, which is very disappointing. Now, even though Verizon across the telecommunications is a pretty good one, honestly, I still don't know why I bought so many shares of it. And even though I was able to sell covered calls over the years to pretty much make back all the paper loss and then some, on top of that, getting paid dividends every quarter, which are pretty decent, Verizon is a position I'll be looking to get out of if I have an opportunity to in the future. Next, we have our 1,000 shares of Apple, which I purchased at an average cost of around $118 per share. Now, what's there really to say? Obviously, I wish I would have purchased more Apple. At $118 per share, I think all of us wish we would have purchased more Apple back in history, but I did purchase 1,000 shares, which has definitely been holding up my portfolio during the good times and the bad. Next, we have almost 2,800 shares of qyld. I've been sort of mixed about this one over the years. There's been times where I've hated it, times where I've liked it. Overall, probably a little bit too heavy on this ETF, considering there are better, higher yielding ETFs across the market that are now available. Even though qyld, I'm down a little bit as far as paper loss goes, the ETF has paid me every month and has been pretty decent for the portfolio. Next, we have our 2,865 shares of Realty Income, one of my favorite single holdings, almost $150,000 position right here. Nothing to say about this one. Happy with it. Wish I would have not bought as much Realty Income when it was so expensive, and wish I would have waited, but still dollar cost averaging Realty Income, and I'm long-term Realty Income all day. Next, we have things like jepi, 1,248 shares of the JP Morgan Equity Premium Income ETF. Not the best higher yielding ETF is what we've basically come to see, although jepi has not been bad whatsoever, and I'll probably hold on to it for a while. Enterprise Products Partners, one of my favorite single holdings also. Not much to say about this one. I have a position that I'm pretty happy with, around 700, 800 shares. The BlackRock Science and Technology Trust, BST, this is pretty much the same difference as BDJ. I went a little bit heavy on it because of what it was offering. It has decayed a little bit in price. All in all, not too upset about it. But speaking of being upset, MPW. I honestly cannot tell you why I purchased over $10,000 worth of MPW back in the day. Well, I guess the reason why is that the dividend did seem somewhat safe years ago, and on top of that, it was yielding pretty high. Now, I'm happy to say that I didn't purchase more than 611 shares, and I'm also happy to say that I did sell cover calls basically the entire way down, so I'm not down all that much. I think when it comes to dividends and cover call premium and everything else, I'm probably down to a handful of $1,000, but nothing too crazy. JEPQ, one of my favorite purchases. I wish I would have bought all JEPQ back in the day instead of jepi, just because of how much I'm currently up on JEPQ. On top of that, the dividend yield is pretty decent. Next, we have OHI, or Omega Healthcare Investors, 300 shares of OHI. This could have easily been another MPW situation, although at least, knock on wood, as of right now it hasn't. OHI is a position I've been selling cover calls on. Maybe I'll get my shares taken away from me in the future and get paid to do so. All in all, not too mad, not too happy with this one. New Seed, not much to say about this one, just another sort of stable higher yielding ETF. qyld, same thing there. SCHD, my 620 shares. I wish I would have bought SCHD when I first started investing. I do not understand why I did not just start buying dividend growth style ETFs and build a foundation from day one, but instead, just like lots of new investors, I got too excited and started stock picking. SCHD, I'm building a foundation with as of right now, of course, but wish I would have bought more years ago. Ultra Group, not much to say about this one, a relatively smaller position. I'm kind of indifferent on this one. National REIT, one of my favorite REITs across the market, 261 shares of that. My 100 shares of JP Morgan, nothing really to say there. Vici Properties, almost 300 shares. I'm still sort of indifferent on this one. I don't necessarily know what Vici is going to do long term. It's sort of been trading sideways. I have been selling cover calls on some of my Vici shares. Maybe I'll get rid of the position. Maybe I'll cut it in half. We'll see. Next, we have our 59 shares of Kinder Morgan. We have our 238 shares of Main Street Capital. I did own a ton more Main Street Capital back in the day, but with selling cover calls and with Main Street Capital growing so much, a lot of my shares got called away, unfortunately. Main Street Capital is a position as of right now I'm aggressively building into again. I really want my position across the portfolios with Main Street Capital someday to be upwards of 500 plus shares at least. I'm very bullish on Main long term. Next, we have our shares of Walgreens. I'm not exactly sure if I updated this. I know I sold off some of my Walgreens position for a loss and moved the money into SPYI, but Walgreens, another single stock that I got trapped into because of the yield. Again, luckily I only purchased around 89 shares of it, but I wish I would have purchased 0. WP Carey, I purchased a little bit too much WP Carey for my own liking. Right before the whole spin-off situation, WP Carey with 351 shares, a little bit heavy, a little bit overweight. I am selling calls though. Hopefully get rid of some of these shares somewhat soon. Although honestly, I don't really hate WP Carey. I just am a bigger fan of Triple N and Realty Income. P&W, not much to say there. Tesla, fun gamble position that I bought into. And when I say gamble, yes, I'm down basically 50% as far as price return goes. I've been getting paid big dividends along the way. I'm still in the red, like basically everyone else. Luckily, I only purchased a few hundred shares. It was more or less like buying a lottery ticket, just to see what would happen. We have UPS, nothing to say there. We have Pembina Pipeline, nothing really to say there. We have a few shares of Arbor, a few shares of Extra Space, some shares of Simon. SVOL, I'm a huge fan of as far as sort of an alternative position in the portfolio. 177 shares of SVOL. I'll still buy a share or two here or there. It's super high yield, interesting strategy. Definitely look into it. And then for the rest of the portfolio, these are somewhat stable, newer positions across the portfolio, relatively speaking. We got our 9 shares of Stag Industrial. We got our 8 shares of T-Row, Kimberly-Clark. We have our big position of Vanguard Real Estate. We have our Coca-Cola, of course, our Public Storage. We have our real new position, the NEOS S&P 500 High Income ETF, SPYI. I've been buying this one like crazy, and I want to continue to do so. It seems to be really promising, at least so far. Let me know down below what you guys think of SPYI. Then the last few positions, again newer, we have FEPI and we have DGRW. So that right there is more or less every single stock and ETF that I own across my portfolios. Is this portfolio perfect? Absolutely not. There's tons of positions and waiting in this portfolio that definitely needs some work and improvement over time. But the cool thing with investing is that as long as you have a strategy, you can continue to mold the portfolio into your long-term portfolio that you dream of and a portfolio that solves for what you're looking for. If you're an investor that wants dividend income, you can build a portfolio around that. If you're an investor that wants growth, you can also build a portfolio around that. And of course, if you're an investor like me that wants somewhat of both, you can build your dream portfolio around that. But all in all, over the last 6 or 7 years, I think it's safe to say that I've learned at least most of the harsh lessons that newer investors learn. And I think, or at least hope moving forward, I can try my best to build the best portfolio that solves everything that I'm looking for, at least to the best of my ability. But now lastly, I want to hear from you guys down below. Let me know which stock or ETF throughout your entire portfolio you are all time most happy that you purchased, and tell me the stock or ETF that you purchased that you regret it, just like my shares of MPW and Walgreens like we talked about in this video. Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.